All right, happy Tuesday, everybody. Almost said Monday, but it is indeed not Monday after Memorial Day yesterday. Hope everybody had a nice weekend now that the weather seems to be warming up around a good majority of the country. And those of you that are finally getting back to work, hopefully the wake up routine hasn't kicked you in the face too terribly hard as you go back, but hopefully it's good to be back. So wanted to send out our weekly update. And here's kind of an overview for today. I'm going to go into why I waited until today waiting until the end of the first trading day of the week rather than sending it out like I would normally do on Sunday night, which would have been yesterday night since the market was closed yesterday, why I wanted to wait until today. I actually recorded something last night, but I wanted to see how today unfolded because it ties in with the next bullet point about could we really be in this new bull trend slash a resumption of the old bull trend, and more specifically what keys kind of to watch for going forward based on what we saw today. And I'm going to give you some updated price targets where we're looking for if everything holds the way that it should from this point forward, et cetera, et cetera. And then we're going to talk through what caused today, because again, at the end of the day, if you guys can understand how to kind of look at society and get a pulse on how people are feeling about certain things, that is usually always more important than what something should be doing. And that's what I've been hammering home, of course, over the last few weeks, is trade what the price tells you in the market, not necessarily what you believe should happen, because the two definitely don't always line up. So that's where we'll go, and we'll take it from here. So first things first, here is a look at the futures on the 2-hour chart based on where they closed today. So the last weekly update I gave you guys, I told you over and over, until this high was broken around 29.75 or below 2,700, this low right here, we have been in an uptrend. I'm going to delete this, I don't need that. And until one of those is broken, we were kind of going sideways and testing this 29.70-ish range multiple times and having trouble going through it. So until one of those things was going to happen, we were going to stay sideways. That was the very last update I gave you. And then boom, yesterday, the futures market was open, even though the actual stock market wasn't, and we went through that. So that leads us right into why I decided to wait until today to give you guys this update. And the main reason for that is when a price level, a strong support resistance or trend line is broken, when that price level finally gets broken, we want to see it do so on really, really strong volume, because that confirms that the move was valid and not a false break, which if we look back at the notes from what this update was going to give, that is exactly what I put in there, fake break. Call it fake break, false breakout. Occasionally you'll get something that will pop through a support or resistance level, but then will immediately go right back down. And really all it's doing in that situation is it's breaking through a certain level, and everybody that has stop orders, because that's where they're taking their loss at that price level, it's causing all of those to fire, which is causing the instant pop. But because it wasn't valid, then it instantly turns and goes straight back the other direction. So to give you an example of this, here were some highs that were held from before we hit the 2750 lows and then the 2970 ones, or highs, excuse me. We had these highs right here that had held twice at 2640. Then we got back up here a third time, and if I leave my cursor, it's not going to like that. Let's draw a trend line in there real quick, make it a little easier for you guys. Right, if we have this support resistance line in here, you can see this candle now that finally broke through it did so on really, really big volume. Okay, and that's what you want to see to validate that what happened was legitimate and not a fake break or false breakout, right? And then you can see it went on, it popped up hard, came back down, retested it, and then continued its move up. And then this now became the new support line from that point forward for the most part, right? You could have got back in anytime it got down there. And so again, if you think about it from a logical standpoint, what's going on here that's causing this to happen and causing it to have gone from being somewhere that's really hard to get through to now being a point that, hey, anytime it hits there, we should be trying to go long and buy into it. again, the market is eBay, right? It's buyer seller. So at this point in time, leading up until that breakout, for whatever reason, whatever people were thinking at that time, they felt like this was the most the market should be valued, right? Like that is it. Well, finally the consensus came through that, you know what, it's actually worth more than that. And enough people or trades or whatever believed in that and pushed it up through. So now everybody else that was saying, hey, this was our price point that we kind of think is the most that the market should be valued at this time, went ahead and closed out. And if you're short, you're closing out your shorts, which means you're buying, right? You're going long. Other people were waiting for the breakout and then they wanted to go long with it, kind of like we did with this 2970 level, et cetera, et cetera. So that means once it finally breaks up through there, now those exact same people, when it comes back down, everybody else is going to go, hey, this is now, you know, the lowest that the price should be, along with all those people, right? And so every time it got back down there, because we knew that it was holding for so long, okay, well, now it shouldn't go back below that in the short term, of course. And so that's why it holds really strong and the market moves up from there. So that's just kind of an overview of how those things work. So if we fast forward now to today, and why I wanted to wait to give you this update was because yesterday the futures market was open, but the stock market wasn't, right? So when we initially got this break, which closed out my short positions that I had told you guys about and got me in long, right at about 29.80, if you look down here at the volume, because it was a holiday and it was also 4 in the morning, that is not a valid break from a volume standpoint in terms of what we want to see, right? With this thing being tested over and over and over since the end of April, we would have really wanted it to be a strong move through during probably the trading day, and that would have given us much more validity that, hey, that was really valid. Okay, so we popped up through there, and so I kind of wanted to just see last night, okay, was this a false breakout because it happened on a holiday and it wasn't on very much volume, or is the fact that it actually happened and didn't immediately reverse down going to just cause it continue, and it is a valid break even though the volume wasn't there. So now that we've seen what happened overnight last night and then into today, it gives us a little better picture. This is a strong enough move that this is not considered a false break by any means. It doesn't mean that this is, all it really means is that as it comes back down here, if we retest this line, we just have to be on alert a little bit that, okay, it wasn't really this crazy strong break. So until we either see it test it and then bounce off of it, which would prove to us that it is valid, or comes down, touches it, and just blows right through it, then we would know it's invalid. You don't really know, so you just want to be on alert, but it matches all of our criteria that it's no secret that this 2970 level, 2975, and especially the 3000 level was what we were looking for before trying to get in long for a continuation of a bull trend, or in this case, because we had gone sideways for a month, that's why I put that it would be a new bull trend. All right. And then the same thing happened when we crossed above 3,000. So here's the first 2-hour candle we closed above 3,000. That was 3,007, and that was this morning, midnight to 2 a.m. Right. And then during the day, here's the first of many. This was what was most interesting, is what happened when the market opened. And here you can see the market opened, and this is, you know, this is the 9 to 8 to 10 candle, sorry, and this is 10 to noon, and both of those closed above 3,000, as well as this 12 to 2 candle. But again, if you look down at volume on those 3 candles, these two, the 8 to 10 and 10 to 12, were big volume, and then this increased move up was on some slightly significantly less volume, and then this big sell-off candle at the end of the day was on higher volume. Right, so this is just stuff to be watching for. That's why I said we need to watch as this comes back down here. I'm still in my longs, but I have orders to close out as soon as they get below these lows right here. Not because I don't think that the market will continue to go up. I just want to get, at that point, I will want to get better information and more proof before being confident in being able to go long. So if we get below, you know, those old highs and a little bit of lows, that's where I'm hopping out, just to kind of sit and wait and see, and I might get right back in, just going to have to let it play out. But because this move was so strong up, this 2975 level now should be very, very strong. The main concern from today was that this 3,000, while it held for the beginning of the day, towards the end of the day, got pushed straight down through it. Anytime you get through a whole number like that, especially 3,000 being the top 1,000 level of the S&P 500 that we have ever traded through, we would want to see that hold very, very strongly to give us a lot of confidence that being long is going to work out well for us. And we'll look at that on kind of the 6 hour and the daily as well here in a second. So anyways, that's what's going on. That's what happened. I am long now, and I'm just on alert, okay, because these things didn't happen as strong as they should have been, and that's okay. It happens sometimes. So you just have to be aware that you're still making the right trade decisions. This was the right trade decision to be long, but does it mean that I won't get stopped out and it was somewhat of a false break? Very well might. But this does not fit that definition by any means. So that's where we are. And until we really see this broken, and then really until we see a low below 2,900, we are now in an uptrend. We are making new highs and lower lows. Okay. So that's where we are. So price points, let's look at the 6 hour chart to give you guys a better feel for that. All right, so here it is on the 6 hour. You can see again, same thing. This was the same support line, resistance line that got blown through. So now we kind of got to zoom out to see. And, you know, if everything is equal, this is now busted through and pulled back to close-ish to where those highs were from yesterday. We would now ideally really want to see this continue up really hard. And that would mean that tomorrow we would want to see a pretty sizable green up day in the market. If that happens, much more confident and happy about how things worked out. If it stalls or trickles down, that's not really what we want to see. But again, you can see these lows here at 2,900. That's what you want to keep an eye on. We don't want to see those broken because then that would be a new low coming in that isn't necessarily great. So looking at where we would expect this thing to run, the next real one is up here at this right below 3,100. So there's a little bit of one at 3,070, and then another one up here, 3,087, and then 3,112. So as we approach this area, somewhere between 3,065 and 3,100, that would be where I will take profits from this original entry, right? I won't short it right away. We'll see what it looks like when it gets there. I might do it if it proves some things to me, but then we'd want to wait and try to get back in at a lower price if it reverses off there. And then if it blows through that to the upside, then really the next super duper strong levels will be up here at 3,200. So kind of whole numbers is the name of the game right now. But we would expect to see this thing move, like I said, pretty violently to the upside tomorrow if this break today and yesterday was really true after testing as many times as it did. So that's what's going on in the big picture. And we said last week that, hey, until one of these things happens, we're just kind of sitting waiting for it to happen. Well, now it's happened, and rock and roll with it. So hopefully you guys have been able to make your trades accordingly. So then the other question I got multiple times today was, well, why did it happen? What in the world is causing this to happen? And it's a great question, because all of this stuff that I've talked to, those of you that I've talked to individually over the last few months about, all of it has panned true, right? My biggest concern, and I talked to you guys about this, I'm pretty sure in the last update I gave, the last weekly update, was that this whole panic selling at the beginning before this virus really hit us, when we settled out down here around 2,100, 22, 2,300, like this is what people were believing the market was worth based on the expectations they had at the time of what the virus was going to do, not only in terms of deaths, but in terms of economic and corporate damage, right? It's like buying a shirt, you think it's going to fit well, but you're not entirely sure. So you're willing to pay $10 for it, but you're probably not willing to pay 20 because you've never worn it before. So you don't really know, right? And then the price has moved up. And my main concern the whole time has been every actual economic data point that has come out has been at least the same, if not worse, as original expectations of when people were down here, right? So that'd be the same thing as your shirt not fitting, or fitting way worse than you originally expected, yet now you're going to pay $20 for it. Doesn't really make sense, but that's why we always trade the price, not what we think should happen. So this is what people thought the market value was at that point in time, and now it has gone significantly up, even though earnings have been terrible. Guidance has been withdrawn by almost every company, which I went into last time. Really not a good sign. The GDP data was awful. When the first news came out that the coronavirus deaths might be 100,000 peak, like that might be how many people die in the US, the market tanked that day. And we're already, I believe, I'd have to pull up the stat right after this, but I'm pretty sure we're at like 96,000 right now. So everything is unfolding exactly as people expected when they were selling off their positions through here. But this was just panic selling, and because now it's almost like when you go to a horror movie, right? If the trailers are unbelievably scary and you've had friends that have seen it and say it's the scariest thing that's ever been made and you're going to poop your pants and all this sort of stuff, the amount of hype that you're going to build up about how disgustingly horrifying it is going into the movie is going to make it really hard for that movie to live up to the expectations, even if it is a truly horrifying movie, right? So you might be underwhelmed with how crazy, awesome, good the scary movie was when everybody else thought, oh, it was actually the best thing ever. Same thing's going on here, right? Everybody had all these expectations, and it's what happened when we turned is that, and I told you guys that people were running out of pessimism to sell on. Like they just wanted good news. They wanted things to feel happy. They wanted to be happy about things again. So they didn't really care what new projection came out or how many cases were in this new state, blah, blah, blah. Like they got it. Their virus is here. It's going to kill a bunch of people. It's going to do a lot of bad things. But my opinion is that we just still have gotten way overcooked, because when you think about it, basically what we're saying by the market being at 3,000 is that we've only been up at above 3,000 from November 1st of last year until this virus hit. So basically what we're saying is in our current economic conditions with what is going on, even though companies just got closed for months and some of them will continue to remain closed for other months, even though we're reopening the country pretty strongly. But with everything that's going on, the market is still as strong, if not stronger, as it has ever been in history, except for the last quarter of last year. That to me is what is most concerning about this whole thing, because that's just not like, how can you have an economy that's shut down for months and say, oh, it's as strong as when it was open and we were booming? Doesn't really seem logical, in my opinion. I'm no expert, but that's just me, right? The other thing that goes into it is the optimism and pessimism piece. You know, people believe that this 34 million unemployment, it's just like this. People that the first week that we shattered records with unemployment claims, like the market got hit really, really hard. But after that, we continued to just set new records for unemployment over and over and over. Now we're at Great Depression levels of unemployment, but people just don't care about it because they expect that within 2 months, all 34 million people that lost their jobs are going to have their jobs back. And Mark Cuban, I can't take credit for this whatsoever, Mark Cuban came out on an interview on the Pat McAfee show, and he talked about how, and don't quote his numbers on this or mine, but the most jobs created in history in a 1 month period was a little over 300,000. So we have 34 million people unemployed that got unemployed in like 6 weeks. Yet the most in history that we've ever created new jobs from is 300,000 in a month. Yet people think that within like 2 months, all 34 million people are going to have their jobs back, right? So the reason I'm saying I think we're very overvalued here still is just because everything I just talked about, what people expected, expectations are worse, yet we're almost 20% higher than where we were at that time. All the numbers are worse. Unemployment is worse. Everything is worse, yet we're saying, nah, we were initially wrong about what we thought was going to happen, even though it is happening. Nah, we're good. Everything's going to go back to normal, and we're going straight up. And we very well might. I've said that over and over. The market has a mind of its own. That's why we play the price points. But that's what's going on. So it's optimism and pessimism, and people just want to feel good. And that goes into seasonality. That's what I put in the update the original update print too was seasonality, and that's basically that we're going into summer, right? We had Memorial Day weekend. Do I think it's a coincidence that this breakthrough of 3,000 happened over Memorial Day? No, because finally, for the first time in months, people were flying. They were traveling to destinations. It was nice weather, so people are getting outside. Things are reopening, right? Everybody's feeling really good right now and going, huzzah, this thing is behind us, right? So it's this next leg of optimism that has come in. And then on top of that, the one thing I do have to admit makes me more bullish about everything is that the states that were open weeks ago are not showing significant acceleration, at least from the data that I see, in terms of cases spreading, like we would have expected to see, like New York had and stuff like that. So that's a positive sign from that. And because that happened and everybody got to enjoy themselves and get outside, and people want to feel good during the summer, and they just have this quarantine and all this sort of stuff, like people just want to be very optimistic. And that's why, even if my analysis is right, which it doesn't matter whatsoever, right? You have some people that believe the same stuff I do, some people that vehemently don't believe it at all, and that's fine, right? But if it ends up being correct in terms of are we overvalued, it doesn't matter. The market does what the market does, and you just got to play along with the game. So that's just giving you guys a piece of insight into, okay, well, why did this stuff happen? Why did we get this breakthrough up? And the most kind of concerning thing that I have is that you always hear the old adage that Wall Street buys your fear and sells your optimism, or sells your greed, whichever way you want to do it, right? And it's possible that this final breakup through of 3,000, even though it's very strong from a price action, might end up being the thing that causes Wall Street to go, okay, that's enough people, like enough optimism built up during this last 2-month period. It's time to face reality again. And they force everything back down and start short selling stuff. But we don't know. So that's just kind of got me on alert. That's why, again, I want to see what happens tomorrow. It should be a really strong day one way or another. But as long as we see cases continue to settle the way they are, especially after this weekend when you had tons of reports of massive, lake parties and pool parties, and everybody's out and about shopping and doing all this sort of stuff. A lot of people not wearing masks. If we get a week, 2 weeks from now, and there's no significant surge in cases from that, that's a pretty good sign that, yeah, things are actually going to go back to normal from that standpoint, but it still won't fix the unemployment thing. That's a big piece of the puzzle that I still don't believe this prices in how badly damaged companies actually are. And so I stick by my belief that I've had since this whole thing started and we finally reached the bottom here, that the next big wave of selling will come when the actual financial data comes out from this Q2, when companies actually show. Because at that point in time, the optimism will be out of steam from, it being summer and people getting outside and happy that things are over, blah, blah, blah. Like, I think, might be wrong, who knows. But at some point, the chicken's got to kind of come home to nest, and the numbers are going to line up, and things are going to be overvalued. And you're going to have some companies that are going to be undervalued because they've thrived during this. So you just got to make sure you know which companies you're trading or investing in and why you're doing it. But that would be, in my opinion, still, even though I'm long now, when that wave comes out, in the fall, June, or July timeframe, August, that's when I'll be most on alert for another situation. Definitely not this drastic, I don't think, but that's when I would expect we could see some hardcore selling. So anyways, kind of went on for a little bit there. Hopefully that helps you guys. Any questions, always feel free to hit me up. Have a great week. Pay attention tomorrow if you have any positions that have a high correlation of what the overall stock market does. That way, if this thing runs up super hard, this is really valid and this is an uptrend and this is going to be a pretty strong support level for a long time, versus if it trickles or drops through, that this was kind of a false break and you just want to be ready to make some changes to your positions if you need to. So talk to you guys later. Have a great week.